On today's podcast, I had Z, aka The Traveling Trader, on YouTube. He's got 250,000 subscribers, and we broke down all things day trading. He taught me what technical analysis is. We talked about Cathie Wood and her investments. We talked about how it relates to cryptocurrencies and FOREX, how these guys are day trading versus stocks. We go even into the meme stocks and how Wall Street is front-running people with high-frequency trading. There's a whole bunch of things that we cover, everything stock related. And I know many of you aren't stock people who probably watch this show, but I can tell you it's definitely interesting, especially if you are thinking about diversifying. And even if you don't want to day trade like myself, I don't have time to do it. I think that some of the principles we talk about in this episode will help you pick some of these blue chip long-term stocks that I'm probably going to be investing in at some point here as I want to diversify. So with that being said, let's jump into the podcast.
Welcome to the Ryan Pineda Show, where our mission is to invest,
I only expect to make money in things that I understand.
innovate,
It's about believing in the future and thinking that the future will be better than the past.
and inspire.
I am much more likely to hit my goal just due to putting it out there.
You're now rocking with the best.
What's going on, everybody? Welcome to another episode of the Ryan Pineda Show. Today, I've got a stock guy on. You guys know I'm not a huge stock trader, and we'll try to get into that later on in the episode. But my man Z here is also known as The Traveling Trader on YouTube. He's got over 250,000 subscribers. He went from a college dropout to a millionaire day trader. And you guys know I'm going to pick his brain on this day trading stuff, and whether or not these charts that I always see these day traders having are legit, and how do they even come to these conclusions? So what's up, man?
What's going on, man? How you doing? Good to be here.
Yeah, man. So
Thanks for the intro.
yeah, we were talking a little pre-show, but what is the Traveling Trader?
The Traveling Trader is just a passion project that I started in late 2017 and didn't know that it would actually get to this level in terms of the subscriber base on YouTube.
Right.
But the Traveling Trader is basically just, personifies me. Not that I'm the most important thing in the world, but yeah, I like traveling. I like trading. I trade for the most part, basically to have the freedom to do whatever I want. So whether that is represented in traveling for some people like me, or, whether you are looking to quit your job or provide for your family in a better way. Yeah, the whole point of the channel is that, taking trading as an endeavor to basically gain some sort of freedom. And for me, that's traveling.
Right. So are you married? You travel alone?
No, I'm not married. Nope. Sometimes I travel alone. I have no problem traveling alone. Did a lot of solo trips. But yeah, I try to take a few people with me.
How is it traveling alone? I've never done that.
I mean, you have to be comfortable with being by yourself, and I certainly am. It's not for everybody. It's not for everybody, for sure. But for me, I mean, I find a lot of solace in it, in traveling alone. And you get to experience things on your own time. You're not really tied to anybody else's schedule or, people yapping about when are we going to go eat or whatever.
Right. Yeah.
But I like
feel
it.
that. Yeah, my wife and I like to travel a lot. And now that we have kids, it makes traveling a lot harder.
For sure.
They're young. My son's 3, my daughter's almost 2. But even when we go travel without kids, we'll leave them with our parents and we'll go travel just us two. We love it as a couple, and it's cool. And then we've even thought okay, should we bring couples along with us? And just, I don't know, even the thought of that, I'm like, dude, that's a lot of work, because now you got to plan all this stuff with them and coordinate and, book these dinners and, hang out, even though you still want to be alone sometimes. It's a lot of work to.
Yeah, for sure. It's a lot of work trying to coordinate with people's schedules and moods and, times that they're hungry and whatnot, for sure.
Yeah. So, you're saying that being a stock trader allows you to do that, which is cool, because obviously you can go trade stocks from anywhere in the world. Does not matter where you're at.
As long as there's an internet connection. And there are some places that literally I will read up on how good the internet is before I go, depending on whether I'm going to trade on that trip or not.
Right. So before you became the Traveling Trader and you had the freedom to do this, how did you even get to that point?
I mean, it starts really early, but I'll summarize it. But when I was a kid, there was a time that I was playing video games, right? And my dad walks by, and I was in the single digits, probably 8 or 9, and he's like, "I own a share of that company." I was like, "What company?" He's like, "Nintendo." He's like, I own a piece of it. I'm like, what do you mean you own a piece of it, Dad? You don't own
I
Nintendo.
own Nintendo.
Yeah. I was like, what do you mean you don't own Nintendo? And, same thing with the cereal boxes. He's like, you know that I own a part of Kellogg's. And I just could not, like, it fascinated me, but I just could not grasp the idea of ownership. So then he bought me a paper share of Kellogg's and a paper share of Nintendo. And he's like, now you own a piece of Kellogg's and you own a piece of Nintendo. So to any parents out there who are trying to get their kids, into the markets, obviously invest in things in products or brands that they are aware of, right?
Right.
But it all started there, and I knew throughout school that I was going to end up doing something in finance. Ended up majoring in finance, graduated at the worst time ever, right? Year 2000, .com bust. Decided to go to graduate school, ended up running out of money. That's a long story. Ended up dropping out of school, and I'm like, what am I going to do now? I taught myself how to code, so got into software development. Worked in software for a few years, and then the 2008 crash happened. And at that point, I had been working for about 6 years, had a little bit of money saved up. I was single, had no commitments. And then further to that, I was in a bad motorcycle accident in 2007. So I got a little bit of settlement money. So I had the settlement money, some savings from work. 2008, 2009, I saw the markets crashing. And that's when I was like, okay, for the first time in my life, like, I have an opportunity to create a life-changing scenario for me. And that wasn't through trading. In this case, we're just talking about investing, right? So
Buying good companies.
buying good companies. Yeah. And at the time, it's crazy because I'm dating myself, but at the time, oil companies were all the rage. Obviously bought Apple, bought Amazon. Amazon was not, what it is today. But at that time, like, if you fast forward to now, you could have picked really any company that was on the stock
You'll
market,
be fine.
and you would have been fine. So yeah, a couple years later, markets started ramping back up, and I'm seeing my investments exponentially gain. And I had started a contract job at a media company in LA, and there was a group of software developers there who were trading options. And obviously, I had learned about options in finance on a rudimentary level. And then obviously, when I graduated, there's a short stint that I did at a brokerage firm before graduate school. Anyway. So I learned about options, but I'm looking at these guys, and they're trading options all day, and they're making insane amounts of money because they weren't shy about, the trades they were taking. So we started a options trading group at work, and basically found ourselves doing almost no work and all trading. And it was one of the most formative experiences ever, because, being in a community, you probably know this from whatever it is that you're involved in, but being in a community with people who do the same thing, you get to pick their brain, right? So there was that community aspect of this options trading group that we started at work, and it really taught me a lot, and I think fast-tracked my development. And, I learned things in months that would have taken me years to learn, for sure.
So before the crash, you weren't investing in stocks. You were just kind of working and doing your thing.
Yeah, I mean, I had, like, passive investments in the S&P and stuff, but it was nothing to
You
write.
weren't picking
write home
companies or like.
No,
Yeah.
no. I mean, I had shares in a few companies, but at that time I was also limited by my capital. So, I did follow the markets, but there was little reason for me to aggressively tackle investing because I just didn't have the means up to that point.
So the crash happens, you sense an opportunity, and you join this group of dudes in your office who are just trading options. So for those who don't know what an option is, explain it.
An option is basically a derivative in very, very basic terms.
What's a derivative?
A derivative is exactly what it sounds like. It derives from basically the underlying, which is the stock price, right? But in very basic terms, so I don't bore anybody here, it is a bet on whether the stock price will go up or down by a certain time, right?
Okay. You
can look at it as a bet. And that's why a lot of, sports bettors do take a liking to options trading for sure. But in reality, what they are, their value comes from, they are contracts that allow you to control 100 shares of stock.
Okay.
Right? And if this is boring for anybody, I apologize. And so the value of these options in general move with the stock. So if you buy a call option on Tesla, Tesla's price goes up, this call option will go up as well. It obviously is a lot more complicated than that because you have time value, you have an expiration date, you have a strike price. We don't need to get into all that now, but that's exactly what an option is. And so it allows you to basically leverage your trading where it would take you so much more money to make that same amount if you're just trading the stock versus if you're trading the option.
Yeah. So what it sounds like to me is option is very much like how we use mortgages in real estate. It basically, if I had to go save 500 grand to go buy that house, it would take a long time and my return wouldn't be as good versus if I just go get a mortgage for, 5% down. I only need 25 grand to now have the same rights to this 500K house. Is that similar?
That's a very good way of looking at it. I've actually never likened the two, but you're right. You're essentially being able to control an asset.
Right.
That is worth a lot more, right? With a fraction of the capital
Of the
commitment.
cost. Right.
Yeah.
So you mentioned there's expiration dates on these things and stuff. So you're like making this bet. Are options just traded on, like TD Ameritrade and stuff? Like they just have this list of bets?
Yeah. Essentially, any brokerage, worth their weight in gold, and even the ones that are not, like Robinhood or Webull, you could trade options on any of them, right? Because the central exchange is normally going to be the CBOE, which is in Chicago. The exchanges that we have on our phones, these are just like conduits to
go there.
Right. So yes, TD Ameritrade, Charles Schwab, Robinhood, Webull, Fidelity, whatever.
So give me an example of like what can be made with options. Like, okay, Tesla, I think they did another stock split. It's like, what's Tesla's stock at right now?
Tesla's stock right now, before I came in, was at around 1,100, shy of 1,100. It was like 1060-ish.
Okay, so Tesla's 1,100. And if I was to go just buy a share of Tesla for 1,100, right? Like whatever happens. I can buy it or I can sell it, and it goes up to 1,500, and I make $400.
Mm-hmm.
Like, what would be the difference with an option?
Yeah, so with an option, and we just had a Tesla trade this morning, actually, before I came in here. I had posted it on the Discord. But, Tesla was, and I know we were talking a little bit about technical analysis before this and how, to people that might not be well-versed in it, it does seem like just random lines drawn on a chart.
Like my kid drew it, yeah.
Yeah, we'll get into that. We'll get into that because I'll tell you exactly why technical analysis is valid and why it is one of the most important things to look at. And we can relate it back to mortgages as well, to a world that you obviously understand very well. So yes, so a Tesla put option, for instance, might cost $2,000. But if it makes the move that you expect based on what the technicals are telling you, that option can easily increase 100% within a day. Right. So if you bet that Tesla's going to drop to 1050, Tesla's at 1100, it drops to 1050 or even below, that option is now in the money. That option exponentially gains, right? And obviously it depends on the expiration date. So the further out you go, the more expensive options get because you're buying more time for that bet. So it's almost like, if you think about it like a sports bet, right? Before the game starts, your bet is worth a lot more because there's a lot left in the game. If you come in the fourth quarter and you try to bet with a minute left, you're not going to get much for your money because most of the game has already been
decided.
Played. Yeah. So it's common sense risk reward, honestly.
So I mean, I see these people talking about options and like making just crazy multiples. So what would a bet be if I was like, yo, okay, Tesla's $1,100. I'm betting it's going to, I don't know, $900 today. It's going to take a fat dip.
Mm-hmm.
Like, what would I get paid out on something like that?
Yeah, I mean, it all depends on, options are priced based on the activity. It's like supply and demand, just like anything else. So there are buyers and there are sellers of that specific option. And that will determine the option's implied volatility, which will then have an effect on how exponential Tesla's price can get. But implied volatility or volatility tends to spike when things tank because moves down, whether we're talking about housing market or stocks or whatever, moves down are usually way more violent than moves up, right? Like things appreciate incrementally, but they tend to tank exponentially.
Okay, so moves down will pay less because it happens more.
Well, moves down will actually pay more because as implied volatility spikes, that option now starts gaining a value exponentially. Right. You're saying if you bet against Tesla.
Yeah.
As opposed to betting that Tesla will go up.
Right.
Those options tend to, when implied volatility is low and something's moving gradually up, those tend to pay less percentage-wise than if you make a bet that something's going to tank and implied volatility spikes. And the stock moves in your favor.
Crazy.
Yeah.
There's a lot that goes into options.
A lot. And I guess you asked me at the outset, like, what is the traveling trader? And really, one of the main things that I try to teach, I guess, or try to convey is that, it's not elusive. It's complex, but it's not elusive. Anyone can do it if you have the intent to learn. But it isn't something, I also don't want to give the impression that it's something anyone can do. You don't just wake up one day and say, I want to play baseball professionally, right? You don't just wake up one day and say, I want to be the best real estate agent in LA or San Francisco, whatever, right? There's a lot of work and study that goes into it. Same thing with options trading.
So you started cutting your teeth with those guys on the floor. What happens after that?
What happens after that is I got let go of that
because you weren't working.
Position. Yeah, exactly. We weren't working. Wasn't outputting anything. But that was the real time, or that was the first time that I was like, okay, I think there's something here. I think there's a chance that I can make more than I do in software development. Now, again, you tend to look at a finished product and judge yourself by that finished product. You don't see all of the sweat equity that went into beforehand, right?
Right.
So it wasn't like, from 2011, immediately I quit my job. Like, it still took another 6-7 years for me to get to that point. But I saw it. I saw the potential there. And that's the important thing.
Right.
Yeah.
So you just start honing your skills. You keep getting better. Did you seek out mentors or anything like that to learn better?
Honestly, not, mentors in the sense that, yes, I mean, not in the physical sense. So not mentors that I would meet and talk to, besides the group of traders that I knew, who I still know to this day.
Right.
Besides them, but not, it's not like I was trying to have lunch with Warren Buffett or whatever.
Well, it's like $1 million to have lunch with him. So.
Yeah, of course. Right. I mean, yeah, that'd be a pretty expensive lunch, but, yeah, I mean, I've always been driven by stories. I've always been, ever since I was a kid, I found myself driven by other people's stories, right? So there's a great American author named Joseph Campbell, and he wrote The Hero with 1,000 Faces. Basically, it's a story of the archetypal mythic character, right? Who goes through struggle at first, ends up going to seek purpose in life, find something that defines him or her, comes back a hero, right? This is the story of whether we're talking about Luke Skywalker or whoever. Even George Lucas said that was a main focus for him creating Star Wars. So I've always been fascinated by people's stories, and I've always found really I've always found inspiration, whether we're talking about Michael Jordan or Serena Williams, or Gary Kasparov. I've always looked at those people who are experts in their field and tried to pick their brain, even though I don't know them, through their stories, right? And then try to apply that to whatever I'm doing. So it wasn't necessarily mentors in the trading sense, although, yes, I mean, I read a lot of trading books. But a lot of the grit and the will to learn, I mean, you can't really teach that stuff. Like, either you have the drive and you seek it out, excuse me, and you seek it out in various forms of inspiration, or you don't.
Right.
Like, I don't know, what inspires you? What stories have inspired you when you were building your businesses?
For me, man, I mean, obviously I grew up wanting to be a baseball player and, pursued that. I got coaches, I got mentors, being around other big league players, you see how talented and good these guys are. And so anytime I would see somebody who was playing it at the highest level, I would become super inspired. I'm like, wow, I've got a ways to go, but man, I've seen it firsthand, like what's possible if you really put in the work. I went pretty far in baseball, but as I transitioned into business and real estate, I think for me, one of the big problems was early on, I pretty much failed my first 5 years. From 2010 of getting licensed all the way through 2014, I did not have success because I never was around success. I didn't have a group of people that we were talking on a daily basis for a mastermind. I didn't have a mentor. I wasn't taking coaching or classes or even listening to YouTube or I wasn't doing anything to grow and be inspired. So, it wasn't until 2015 when that light bulb clicked where I found a website called Bigger Pockets. I started listening to their podcast and I was like super inspired right from that. I was like, okay, this is what I needed. I needed just some kind of community and some kind of, whether it's a virtual mentor or not, I didn't know anyone in Vegas. And honestly, there were people, I just didn't apply myself to like go find them.
Right.
But yeah, it was through that I first got inspired and got to, a good level and kind of having that realization like, yeah, I could flip houses for a living. And then it was later on down the road through all of these next endeavors I did where I started hiring coaches and mentors. I joined professional masterminds like where, I paid a lot of money to be in them, to be around other people who are very successful. And that was the biggest game changer because being around those guys who had already achieved what I was trying to achieve made it that much quicker. We were talking off camera about YouTube and stuff, and you were like, oh man, you only started a couple years ago? And I was like, yeah, I did it. And then I immediately started to try and meet all of the top creators. And so that's how I met my friend Graham. That's how I met, I took everyone's course. I watched every YouTube video I could about becoming a creator. I was like, oh, I get it. Like, have a good thumbnail, have a good title, hook them in the first 30 seconds, and you're pretty much gold. Like,
Right.
And, make your camera and your audio look nice.
Right.
You're ready to roll.
Right.
But that didn't occur to me being a new person. I never would have thought, man, focus on the thumbnail or the title.
Right.
I would have just been like, yeah, I'm going to start talking about this. My name's Ryan. What's up, everybody? And that's what I used to do in my videos. And it's like people click off when you do that.
100%.
So, I think it's just, I became inspired from any endeavor by seeing the people at a high level do it and trying whatever I could to get in their circle to learn from them.
Yeah. Yeah. I'm with you, man. Like being inspired by excellence, even if it's not in the same field that I'm in, is something I've always gravitated towards. Like ever since I was a kid, I've always gravitated towards like, how did that person get there? What did they go through?
Right.
And what can I take from them? Right. And it doesn't have to be in your same field at all. But yeah, with the YouTube thing, you're right, man. Like that, when you start recording videos, it's hilarious because you care about yourself more than other people care about you. So when you flip the camera on, you're like, oh, this is my story, or, hi, this is Z, blah, blah, blah. There's no hook in the beginning. Nobody gives a shit who you are, right? You have to make them give a shit. Then once you start putting out good content, then they're like, oh shit, I'm here to see Ryan, or I'm here to see Z. And then they care about your story.
Right.
But initially, they don't care as much as you do.
Right.
You think, because, you're in your own mind, you think you're the central focus. They don't care.
No. What can you do for them?
Yeah.
100%. If you're listening to this podcast, then my guess is you're interested in real estate investing. Some of you are just starting out, while others are trying to scale their business to the next level. But the problem is, with so much information out there, most people don't know which program or coach to trust. Well, I'm a bit biased, but I believe my company, Future Flipper, can help you get to the next level. We've coached thousands of students from all over the world on how to build their real estate investing business. It doesn't matter whether you want to flip, wholesale, or buy rentals. Our coaching program has everything you need to become a great investor. There are many things that we include with coaching, but to give you a few examples, you're going to get an accountability coach. These are people that have had success in their own business, and they want to make sure that you achieve success in yours. We also have all of our documents, our systems, and processes that I've used to buy hundreds of homes. You can copy and paste them directly into your own business. And we have events where you get to meet me, top-level guest speakers, and other students who are crushing it. My students do deals with each other, and I personally do deals with them too. In fact, at a recent event, I just honored over 20 people in our program that made over $1 million in the last year. So if you want to grow your real estate business, head over to futureflipper.com and apply for a call with our team. The call is completely free, and they can help point you in the right direction whether you work with us or not. So go to futureflipper.com and book your call today. For the last year, the real estate market has been on absolute fire. Prices are at all-time highs, interest rates are at all-time lows, and there is more money in the economy than ever. But with so much competition, many investors are sitting on cash, struggling to find great deals. If this sounds like you, then you need to invest with Pineda Capital. With my network and social media following, we get access to the best real estate deals all over the country. And if you're an accredited investor, you can invest with me on those deals. In fact, last year we purchased a 334-unit apartment complex in Georgia for almost $20 million. we expect it to be worth well over $30 million when it's all said and done. Our goal with each deal is to build in so much equity from the beginning that we're able to refinance our investors' cash out and own the properties together with little to no money into the deal. And the best part is, you don't have to do anything. Our team will find the deals, handle the renovations, get them leased, and eventually refinanced or sold. All you have to do is provide the capital. So if you want exclusive access to our deals before they hit the public, go to pinedacapital.com to schedule a call. We can put your money to work today to start getting you great returns. So go to pinedacapital.com now to get access to our deals. So going back to what you can do for me, I want you to teach I want you to teach me technical analysis, dude. So
Right.
for those of you who are listening, that's, like I said, those charts that I see everyone post on Twitter and stuff where it looks like my kid made it, and I don't get it.
Right.
What am I looking at?
So let's relate it back to something. Well, first of all, you're not going to learn technical analysis in half an hour, but let's relate it back to something that you have expertise in, okay? When you're pricing a home, okay, how do you know what is an outrageous price, whether it's too much or too little?
I mean, you're going to look at all the comparable homes and see what they've been selling for the last few months, and you'll be able to say, man, why did that one sell for so much, or why did that one sell for so little?
Exactly. And who drives those prices?
Supply and demand, really.
Exactly. So when you're looking at a chart, you're looking at the aggregate of everybody's psychology, buyers and sellers in the market who are agreeing what that thing should be priced at.
Right.
When you asked me what Tesla's price is, right? And we said around 1,100. Let's just, for easy purposes, let's round it up. Around 1,100. Why is it not 4,000? Why is it not 200? Right?
Yeah.
Because the aggregate of buyers and sellers have agreed that that is the price. So over time, these things develop ranges and trends, and all you're looking at on a chart is what people are willing to buy and sell Tesla for. And that's why it's not 1,000 one day and 5,000 the other day, right? That's why it gradually tends to go up or gradually tends to go down, unless we're talking about meme stocks or something.
Right.
Let's not get into that. Let's get into serious companies.
But do you guys trade? Did you trade those back?
Yeah, I trade everything, man. I trade everything. I don't invest in everything.
Right.
Investing and trading are two different sports.
Investing's your long-term
Yes.
holdings.
Trading is a sport.
Right.
Investing is a strategy.
Yeah, you're more than willing to just go buy a piece of crap if you think you can get it
100%.
right.
If it's legal and it's available for me to trade and I can spot a trend, I'm going to attack it.
Right. Okay.
100%. But I'm not going to invest in it. Very different story.
So did you make good money on GameStop?
Yeah, GameStop, AMC. Yeah. For
so
sure.
funny, dude.
For sure. You know, we still trade GameStop and AMC when there's like a lull in price action. And again, back to technical analysis, when you see that there's sleepiness in the price action and it has the propensity to pop due to whatever factors you're looking at, you can make a lot of money on those options.
How are those stocks doing? I haven't even looked since all that debacle.
They did have a good run as of the time of this recording, the last couple of weeks, but yeah, have since come down.
Like to where they were, or like are they still
No, it's
like
still
way
elevated.
overvalued?
It's still way overvalued. And then now they're doing crazy things like AMC's investing in, I'm going to get shit for this, so I don't know. You can cut it out if you have a lot of apes watching your channel.
No, I don't care.
But, you know, they're investing in some mining company. Like, this is a movie theater company. You know what I mean? Oh, can you swear in here?
We can edit it out.
Okay. Yeah. So anyway, back to
the movie theater's a mining company now.
There you go. There you go. Yeah, exactly. Back to your question about technical analysis. That's why it is very valid. They're not just random drawings. It's basically price action, the way that you would look at home prices.
Okay, but like, I guess when you look at a stock chart, home prices don't go like that. You know, like for the last, now granted, okay, home prices and pretty much all assets been going up like the last, bunch of years. But if I were to go look at a home price chart from the last, 4 to 6 months, I would see that, they're all pretty consistent. Like they're probably pretty consistently going up. And the difference with homes would be if I see outliers, it's probably because of their condition, right? Like every home's different. It's not like the company. The company never fundamentally changed the last week, right? But like I can say, oh yeah, well that house sold for way less because it's a piece of crap. Like it needs to be fixed up. Oh, that house sold for way more because that was my flip. Like everything was redone. So like, I just don't get why Tesla, like how you guys would say, because like Tesla could have been $900 a month ago and now it's 11. Like what are you looking at?
Right. Wait, what are you looking at when trying to determine which way it's going to go?
Yeah.
Yeah, you're looking at historical resistance and support. Like, where did most people agree that they should sell Tesla, right? And for a certain time period, that could be at the 1,200 range. Like, that is the max that somebody's willing to pay for Tesla. And where was there what we call a supply zone, right, or support? Demand zone or support. Like, where was there a lot of demand for Tesla?
Right.
Once it breaches just under 700, you see buyers pour in. So that price discovery. Now, the reason that it's different than real estate is because, one, there's a lot more volume, right?
Liquid.
Yeah, you're dealing with like billions of trades a day.
Yeah.
So, you're not doing that in the home market. It's sort of suppressed by the availability of inventory, and it's a standing asset versus something that's really created out of thin
Paper.
air. Yeah, exactly. And then, the way that the markets are, like what the market makers offer in terms of trading hours, derivatives, things of that nature. It's just much more liquid and faster. And each market is different, but the price action, the objective of or the topic of price action is consistent regardless of what market you're talking about. It can move at a different pace. That's all.
So, okay, let's just say for the last month, I've seen Tesla. It bounces between these zones you're talking about. 900 is where people are like, dude, this is too cheap. Like, there's demand. It's going to pop back up. And then 1,200 is where they're like, yep, this is going to drop again because that's what it always does at 1,200. Is that really all you're doing?
No, I mean, I'm obviously
That's a simplified.
like, if you want me to, if we want to do like a technical analysis session in here and book another hour and start going over stuff, yeah, I mean, or you could just go to the channel because my channel is full of that stuff.
Subscribe to the channel, Traveling Trader.
There you go. Yeah, I mean, and that's another thing that I try to teach people is that technical analysis is not as difficult as it seems. It's like showing up at the craps table and people are yelling and there's dice flowing around and chips are flying and you're like, oh shit, like I really want to get in this because it seems fun and people are making money, but I don't want to get embarrassed. I don't know what I'm doing.
Right.
And then once you
understand craps,
show up at the casino at 11 a.m., take the free craps lesson that the Venetian or the Wynn gives you, and then you're like, this game is actually really simple. It just looks messy.
Right.
Same thing with technical analysis. But yeah, that's not all you're doing. There's a lot of indicators. Then you're looking at macroeconomic factors. You're looking at what events are going on, whether it's binary events like earnings or Fed meetings or whatever.
What would cause it to spike?
You tie it all together. And over time, like I said, it goes back to you cannot get good at it by just wanting to get good at it.
So what I'm hearing is reading the chart just from like the graph is only one portion of this because you're looking at all these other things that you don't see in the graph that you have to go look up and learn.
Yeah, well, technical analysts will tell you everything's priced in. So if you know that the market, if you have a feeling that there's going to be a recession or that the Fed is scaring the market and thinking there's going to be a recession and you start seeing selling pressure, you're going to see it on the graph.
Right.
So again, it's the aggregate of everyone's psychology mapped out onto a chart. It's like, where are they buying? Where are they selling?
Right.
So, yeah, technical analysts will argue that everything is priced in.
Got it.
Yeah.
So, speaking of recession, what do you think, dude?
Yeah, I mean, I think we can't get away from the fact that the yield curve, it continues to invert as of the time of this recording, and that has predicted a recession every single time since 1955.
Right.
It's not a good predictor of timing of a recession. So, usually recessions are seen 7 to 24 months after the yield curve inverts. And for those that don't know, the yield curve is basically just between the 2-year treasury and the 10-year treasury. And yes, it can, flip completely upside down where the 2-year treasury now pays you more of a yield than the 10-year. And the reason is because nobody wants to buy the 2-year out of fear of inflation. They want to park their money in something more long-term. So they continue to pour money in the 10-year, which drives yields down. And the 2-year keeps going up because nobody wants the 2-year. If inflation is 7%, the hell are you going to do in the next 2 years with 2%?
Right.
Right? So it's like...
And so then the 10-year would be higher than the 2-year?
The 10-year yield starts dropping as people pour into it. Because
the 10-year traditionally should be higher.
Should be higher, of course. You're committing your money to a way longer time.
Right.
But when that inverts, which it has, it's inverted right now as the time of this recording, and inverted for the first time in, since 2019. Last time was 2019. Yeah, last time was 2019.
And then it came back.
And then we had the 2020 recession. Obviously, now if you want to argue that that's COVID related, could be. But the facts on paper are every time it inverts, we have a recession. within 7 to
And
24
so you're
months.
saying that the 2020, quarter recession was the recession for that yield
That
curve.
was a recession for that yield curve inversion. Yeah.
And now you're saying we have another one.
We have another one. And
When
yes,
did that happen?
well, it's inverted now. The first time it happened was last week.
Last week.
Yeah.
Okay, so that's right now it is April
April
6th. So, I mean, I don't know when we'll release this, probably a month from now. So we might already be in a recession by the time. But no, so, I mean, obviously the yield curve is inverting because of interest rates, I would assume, right?
Mm-hmm. Yeah. I mean, the yield curve is basically the difference in interest rate between the
Right.
2-year and the 10-year.
Right.
Yeah. But nobody's buying the 2-year because they're afraid of inflation.
Yeah,
Yeah.
that makes sense. So you're basically saying, well, it's inverted. We're going to have some type of recession. Maybe it's a 2021 where it's a quarter,
Mm-hmm.
and then all of a sudden the government takes crazy measures again and just dumps money in the economy. Or it could be a prolonged recession. I don't know. Like, what do you
Yeah.
think?
I mean, nobody's been a great predictor of these things, right? Except for the broken clocks, like the Peter Schiffs. Every year he's predicting a recession, right? And he's
Yeah.
right a couple times, once every 10 years. And
Right.
he's still kicking. So,
Old Peter, dude. I
Yeah.
got to get him on the podcast.
yeah, you haven't had him on yet?
No, I haven't had him on yet. Especially being a guy who's a big believer in crypto and NFTs.
Yeah.
I love. I think it's so funny, like him being like the heel of crypto.
Yeah, he's like the WWE
Yeah.
heel of crypto.
He is. It's so funny.
Yeah.
And I was actually cracking up because, he's been wrong the whole time with crypto. Like crypto just keeps going up and up and up, and it's like it would have been the best investment, like out of all these things. But there was a period in January where crypto had like a negative return, like from January of 2021 to January 2022, it was down. And he was like, I told you guys.
Yeah.
And it's just like, yeah, I don't know, dude. This is part of the reason why I'm not a huge investor of stocks and like even just normal cryptocurrency. It's just like watching it. For one, I don't do that in real estate. Like I don't watch what my house is worth every day, right? It's just not something we do. But with crypto and stocks, you have to watch it daily. You're like, man,
Right.
what's up with this, right? Especially if you're day trading, you for sure have to watch. I don't know. I just don't like the feeling it gives me, like being an addict to the market that I have no control over. I don't know. It's weird. Do you get anxiety like looking at this stuff?
I don't. And we can talk about what inherently would make a good trader. Because, just like anything, I think that there are, if we take sports as an analogy, let's take basketball, for instance. There are players that are really athletic, but there are good players that are not athletic.
Right.
And it's because they made up for it in other ways, right?
Skill.
So yeah, but you still have to hone in on what you're good at, right? If you're not a high flyer, you might be a good shooter. If you got a good jump shot, you play a little defense, you could be very effective. You don't have to be flying in the air,
Right.
on every play. Same thing with trading. If some people I think are inherently better at managing anxiety when it comes to money than others. And that is one thing that would make you a good trader. If you don't have that, doesn't mean you can't be, but inherently that is just something that, hey, when you say this athlete has talent, this trader might have the talent of not
The
really
nerves, he's
feeling
not worried
anxious.
about his money. He's going to make
100%.
objective decisions.
Yeah, and that's just one of the things. Obviously, there's many things that go into it. But it's very surprising to me that you say you're a crypto guy and not like usually, you might be just risk off entirely and say, hey, real estate is my thing.
Yeah.
But how can you be a crypto guy and not like crypto is just wild.
Yeah.
And
I love it.
I start like 2017. The channel actually was called the Traveling Crypto. It was not called the Traveling Trader.
Oh, so you were doing crypto.
So I
during
was
that
doing
boom.
crypto because I didn't think anyone would give an F about options.
Right.
I didn't think anyone would care. 2020, everyone was a
Everyone's an
trader.
option trader.
Yeah, everyone was an option trader. But I didn't think anyone would care. And I was like, okay, I can still do technical analysis on Bitcoin, on Ethereum. I could still teach these things that I really am passionate about, but maybe with crypto.
The vehicle.
Yeah.
It has more hype right now.
Yeah.
Yeah.
And I was trading Bitcoin at the time. Now I'm more of a holder. And it was under $1,000 beginning of 2017.
Crazy.
It's insane. But yeah, it's weird to me that like crypto is super risk on. Stocks, contrary to what you just stated, you don't have to check it every day. If you were an investor,
Right.
and you invested at a time when basically stocks were in the red, and you invested in quality companies,
Right.
you don't have to check it every day. If you invested in 2010 and just close your laptop, you'd be fine.
Yeah. You'd be fine with anything,
Yeah,
really.
yeah.
No, so like my position is I am not risk averse at all. Like to flip my first house, I maxed out all my credit cards to buy these flips right now. I mean, I got $20 million in hard money loans like out there. Like people ask me all the time, like, how do you not get stressed out from managing all these businesses and having all this debt? And I'm like, I don't really care. But for whatever reason, I become an addict at looking at the charts every day for crypto. I'm like, what is Bitcoin doing today? Dang, it's down. Crap. And then it's up next day. I'm like, this is great because I don't do it in any other business or investment. But what I'll say is with stocks, the only time I did invest was in March of 2020 because I saw what you saw back in 2008 where I was like, dude, there's no way stocks are this cheap. This is,
Right.
you know, I'm not saying COVID's fake, but I was like, this is like not a real recession. This is man-made in that we have to, like, they're shutting everyone down. Like, that's never happened before. And they're going to let people go back to work.
You're saying the fundamentals of the companies aren't changing.
Yeah, I'm like, nothing is changing. Like, why are all these dropping 70%? This is so dumb.
Right.
So I ended up taking all of my money out of my SEP IRA. I think I had like 170 grand, and I threw it all into stocks. Because at the time it was just sitting there in cash. I wasn't sure if I was going to go throw it towards a flip or whatever. So I threw it all in stocks. The biggest holding being Tesla, because I drove a Tesla Model X and I was like, Tesla's a good company, dude. I don't know why people don't like it. And I don't even remember what I bought it for, but dude, it was like $700 before the split.
Yeah, you probably bought it. You probably bought it like around 100 or less.
Yeah, I bought it so cheap.
And today's prices, I mean.
Yeah, I don't even remember.
Yeah.
And sure enough, in like 6 months, that 170 turned into like over 300K. And I was like, man, I am the greatest stock trader of all time, you know? Like, no, I was like, yeah, this is whatever. And I ended up just cashing out because I was like, yeah, you know, that was fun.
Yeah.
But I just saw an opportunity. I was like, there's no way stocks are this cheap. And
Sure.
I literally just bought companies I like. I was like, well, I think Tesla's a great company. I'm a big fan of Del Taco. And
Right.
I'm like, I think Del Taco's a great company, and why is it only $2? Like, this makes no sense. I'm gonna buy Del Taco. That was my whole investing strategy. I didn't look at any charts. I was just like, this is a good company.
Well, you know, there is some truth to what you're saying. So, like, I tell people all the time that don't have time to look at charts or financials, or they just don't have even the will to learn, right?
Me.
Yeah, I mean, it's like, okay, and you have kids at home, but I don't have nieces and nephews. If you ask them, just rattle off companies. Like, I'll give you $1 for every company you name. And they start naming their companies, they're going to say Apple, McDonald's, Tesla, Roblox, whatever, right? Sony, because the PlayStation, Disney.
Amazon.
Yeah. So it's like, oh, shit. This kid's a genius. He knows
These
all
are great companies.
These are great companies. But brand awareness and moat has a lot to do with you know, the value of a company. And usually the brands that you recognize are going to be blue chip companies. There's a reason you recognize them.
Right.
Right.
As the world starts to go more digital, you need to be aware of which businesses are going to thrive in the future. One of the obvious ones is e-commerce. In fact, last year, e-commerce sales did over $4 trillion globally, and it's continuing to grow. Now, if you're like most people, you probably don't have time to learn a whole new industry and start a new business. But there is another way. You could partner with us at Lunar Ecom. We have over 300 e-commerce stores that we have created and managed for our clients. And the best part is, it's completely passive on their end. The business model is very simple. You cover the cost of creating and running the store. We handle everything else. We pick the products, we handle fulfillment, returns, and customer satisfaction. After all that, we split profits at the end of the month. This means that when you win, we win. If you want to learn more about how it works, you can watch our case study at lunarecom.com. I believe that the e-commerce space is going to continue to explode as the world goes digital. So make sure you're with the right partner who's going to be ahead of those trends. So go schedule a call with my team today at lunarecom.com if you want to learn about how we can start taking your passive income to the moon. Most people want to get rich at all costs. They make sacrifices with their family, their health, and their faith, all in the pursuit of money without even realizing it. But what if I told you it doesn't have to be that way? What if you could grow your wealth in all areas of life? Well, it's possible, and that's why I created The Wealthy Way. It's a community of people striving to grow together in all areas. And we have multiple tools for you to use that are completely free. You can get access to the Wealthy Way Planner, where you can set goals and hold yourself accountable on a daily basis. We also have our Wealth Builder Academy, which is over 4 hours of content teaching you how to manage your time, create the right goals, and all the biggest secrets I've used to grow my life, not only in my net worth, but in all aspects. Lastly, we have our Discord community where thousands of wealth builders are all over the world encouraging one another and growing together. And once again, all of this is completely free. There are no upsells, there are no hidden catches. For me, this is a passion project, and I want to build a community of like-minded people. So if you want to start living the wealthy way today, go to wealthyway.com. There you can get all the free resources like the course, planner, and Discord community. So go to wealthyway.com. Yeah, that was my whole investing strategy. Just invest in companies I like. And, with crypto, it's very much the same, that I'm investing in NFTs and, because I see NFTs like companies too. I'm like, okay, who are the founders of this? Like, what's the vision? Like, is this going to go up? What kind of product do I get by buying this NFT? I don't really invest in Bitcoin too much anymore. I mainly just do Ethereum because you need it for NFTs. And that's kind of my whole deal with crypto. I just like crypto because I understand that more. And it is, to your point, the Wild West. So I think that the returns can be far bigger. You could lose it all too. But I'm cool with that.
Yeah, for sure. I mean, you are definitely an anomaly in terms of people I've met in the markets, right?
Yeah.
Like crypto, housing, no stocks. But yeah, I mean, to each their own. There is something commendable to be said about knowing what type of trader you are or what type of investor you are, and understanding your own psychology and saying, hey, I don't want to be looking at charts all day. And for some reason, this doesn't speak to me. So don't force the issue. You know what I mean?
So actually, let's talk about this, since you're the traveling trader. This is also another reason why I never got into trading, is that it's hard to build a business around it because you are the business. You're the one reading the charts, investing the money. And, I've seen my buddies do it. They've moved to Puerto Rico and made a killing doing crypto. And I watch him, I talk to him. He's like, yeah, I'm out here like 10 hours, and the crypto markets never stop. So he's like, I'm out here 24/7, just constantly trading and doing things. And he's made millions and millions of dollars. But I'm like, I ain't living like that. I'm trying to build businesses that don't require me to be there, that make me money while I sleep, that, are real. That can't just tank tomorrow. And I have no say over how good the company does, or I can't make maneuvers to go help Coca-Cola when they, whatever happens. Like I can go impact my business right now and make a move. So I guess on that side of things, is there a way to make day trading passive, or is it just kind of always?
No, day trading is not passive. Like I said, trading is a sport. It's active. Investing can be passive. But yes, certainly the more tools you're equipped with, the better you'll be suited. So the beauty of options is you're not tied down by directionality. You don't care if the market is moving or not. You absolutely don't give a rat's ass whether the market's moving or not, because you could play either direction. You can even design option strategies that are neutral. If the stock doesn't move, you still get paid, right? So the more tools you're equipped with, the better. But yes, I mean, it is a very can be tiring sport. It does require your attention a lot. It's not, I don't think there's a direct comparison between that and building businesses. Now, can you build businesses around trading? Sure, because a lot of people want to do that.
I thought about just giving money to a trader and being like, have fun with it.
I mean, you certainly can make sure that they know what they're doing and you trust that person. But, I mean, building businesses is completely separate. And you certainly can build businesses around money. I mean, there's tons of hedge funds and education firms and whatnot. So, there are many, and we're building a product right now that I can't say much about, but there are many different avenues that you could take when wanting to build a business around trading. But the act of trading itself is very, it is active. It's not passive.
So what do you think about, I see people build in these bots and softwares to do day trading. What do you think about all that?
Yeah, I mean, we have some bots on our Discord as well. Bots that we recently programmed. I don't. It's a little bit more of a deeper topic, but with the advent of free trading, Webull, Robinhood, there's a reason it's free, right? Like
They're taking your data.
Yeah, they're taking your data. They're front running your trades. So when you're putting in large trades on Tesla or whatever, they see that first, and it happens in milliseconds, right? In algorithms, they see that first, and they put their trades in first.
So messed
and
up.
they're getting pennies cheaper than you are, right?
I read that book, Flash Boys.
Right,
Yep.
right. And you know who
The high-frequency
revolutionized
traders.
payment for order flow? Bernie Madoff. That should tell you something. He
Just
came up
free
with
money.
it. He came up with it. I think it was 1987. He came up with it and pitched it. And then now that we have
Now it's-
technology, it makes it so much easier. Robinhood's like, yeah, it's free,
But for those listening too, I'd highly recommend reading Flash Boys. Like and I read it a long time ago. I need to reread it, but just like I was like, what is a high frequency trader? And then they're like, yeah, these guys were literally building fiber optics. Like it was a race to just win milliseconds
Yes.
to just front run everyone. I was like, what?
Yes.
Like what a waste of money, like to build that just to like make money off of every normal person.
Yeah.
It's not a waste of money. Like it made a lot of money, but like what a thing that is just, how is that legal?
Yeah, yeah. I mean, to try and get an edge, and then you make the SEC prove that it's legal or not, right? And again, payment for order flow to this day is still legal. So yeah, I mean, it's what were you saying? Oh, you were asking me about bots. So the bots that we have are not designed to execute trades for you, but they are designed to look for setups based on specific indicators, right? Or alert you when there's unusual activity in a certain option. Like, oh, crap, this looks like an institutional investor because someone just put in $100 million order on Tesla options for this strike price, this expiration. Usually when you see that, you're like, okay, somebody knows something. That's not retail money.
Right.
That's not. And so in this day and age, we have all of the resources at our fingertips, stuff that I didn't have when I was in finance school. And I graduated in 2000. We had this little crappy Bloomberg terminal in the corner that the school used to pay like five grand for or whatever.
Right.
We didn't have like in my pocket. I have TradingView. I have every indicator I could ever want.
Right. So the bot's just automating that process of looking for trends that you've designed it for.
Exactly.
But it will not make the trades for you.
No.
But I'm sure people have software that
People do, and on the
Auto
retail
trades.
side, it is very mixed. I to this day have not seen a trading bot that executes trades for you on the retail side that is successful.
right.
No.
It just doesn't happen.
No, but I've seen algorithmic trading at institutions, and because they can front run your trades, those are successful, and they have a lot more capital than you do. So
Right.
those pennies that you're talking about
It's a
with
lot of
front running means a lot to them.
Right.
Might not mean anything to you because you don't have hundreds of millions of dollars to throw in a trade.
Right.
So
No, that makes sense. So
yeah.
what do you think about Wall Street in general, dude? Like, I mean, you seem like you've been around it. Like, I mean,
I left it. I went
Yeah.
into software development. I hated it.
it's just
I hated it.
like, is it just, why'd you hate it? Just corruption? Or what?
So the academics of finance I loved, and to this day, and I love teaching it. The environment, at least at the time that I had graduated, the environment was one that I wasn't willing to take part in because you had to accept the fact that you were the lowest person on the totem pole and basically get treated as such for a long time before you can prove your worth. And I have no problem with doing hard work. I have no problem pulling yourself up by your bootstraps. But this was different. This was, oh, you know your position, and you're going to stay there until I tell you that you're qualified to move up.
Right.
I was like, wait a minute. If I can eventually get to a point where I can trade from anywhere and make more money than I would ever here as a financial analyst making $36K a year at the time, what the hell? What am I doing here? Like, I'm equipped with all these tools.
Right.
One day I'll get there.
Right.
I'm not doing this.
Yeah, no, I hear you on that. What do you think about, I mean, you said you're invested in crypto. What about like FOREX?
Yeah. I had this conversation with another interview that I did last week, and he was more of a FOREX trader. And I just said, at some point, there's just too much you're doing, right?
Right.
It's like you're doing stocks and then you go to options and now you're doing crypto. And then now, you know what I mean? It's like, and then futures. There's only so much you can do. And what are you really gaining by jumping into yet another vertical? It's like diminishing returns.
Right.
You know, it's like someone asking you, oh, why didn't you invest in boats? Okay. Now, why didn't you invest in commercial real estate? Okay.
Right.
Now, why don't you invest in airports? Why don't you invest in airplanes? Like, at some
Yeah.
point, it's like, all right.
Yeah. Why not this market? It's hot.
Yeah. It's,
Yeah.
it's too much. So I can't, Forex is an entirely different beast on its own that requires its own attention. And I know options like the back of my hand. So
Right. But Forex has like options and stuff too, right?
Forex has leverage. So yeah, it's the
Same
same
principle.
same concept in which you don't need all the capital required to control the amount of capital that you're controlling.
It just seems like all these guys I see on YouTube, they're all just utilizing leverage or options to like try and make the big money.
Yeah.
Is that pretty accurate? Like very few trading just normal stocks without leverage.
I mean, the people that are familiar with my channel who are watching, and I'm sure there's going to be a few of them, know that I notoriously don't watch YouTube.
Yeah.
I don't. And part of that is to my detriment. Like, sometimes I feel like my views could be better if I followed the same routines that other people do. But I don't watch them because I don't find value in a lot of what I've seen. There's certainly people I respect, but there's a lot you have to sift through. And I feel for the average investor or trader who's just starting out and having to go through all this, and they don't have the utilities to know whether.
So where would they go? Like, you got a course, right? Like, if they wanted to learn trading.
I have a course. You certainly don't need a course. You certainly can, get information for free. But like,
Where's your course? Where would they find it?
if you go to thetravelingtrader.com, you can find it on there, or go to my YouTube channel.
Okay.
But like we said earlier, there's value in having a community of people that are doing the same thing as you, right? So the value of having like a mastermind or Discord.
Right.
It's not so much that, hey, yeah, you're sending out these alerts and people are just jumping in them, but they're learning from thousands of other people who are doing the same thing, and there's people chatting all day, every day with each other. So I think there's a lot of value there.
I actually had this conversation with somebody, and it was about decentralization being so powerful. Like, the reason it's going to work is that when you give a bunch of people a way to communicate freely with no restrictions, and they all have very similar mindsets and ideas, you're going to be able to do a lot more trading those ideas. It's like you were in software, so it's like whenever you see a decentralized, project, it probably gets done really well because there's so many different people looking at it, trying to tear it apart, help it go. And it's just like, yeah, that's the way that I found real success is done, is like not from keeping things secret and like, but from sharing information and like really getting others to point out your blind spots.
Mm-hmm. That's why open source is so valuable.
Yeah.
That's something that software revolutionized. Like, at first, business people thought software people were crazy. They're like, what do you mean you're giving this away for free?
Right.
Like, wait, but we want the community to take a hard look at this. Tell us where it's wrong, what can be done better.
And it makes it that much better.
Makes it that much better.
One thing I saw with, I asked this to my crypto buddy, I go, why do you trade crypto? Why not just do stocks or FOREX or something? And he goes, stocks and FOREX they have too much sophistication in the market. And he's like, there's just not as many spots as there are in crypto, to pick. Would you agree?
I think that if you know how to trade options and futures and other derivatives, then you're in a position. If you're just comparing stocks and crypto, yeah, I would say that crypto has there's more of a chance for you
less efficiency
to gain wealth. There's less efficiency, but there's also less restrictions. There's less regulation, right?
Yeah.
For sure. Yeah, I could see that.
Do you think that like the skills needed to do day trading could be very similar across all those mediums?
100%. Yeah. Especially crypto, because you do see large swings.
Right.
And you have to know how to mitigate your risks. You have to know where your stop limits are, for sure.
Yeah. So you said you do day trading, as like the daily thing to make money. And then I'm sure you're putting that money into, the blue chips you like, right?
Mm-hmm.
What companies do you like?
Yeah, I mean, like I said, it's not that difficult to pick them out. But okay, so there are companies that are like for a lifetime, and then there are companies that are like based on what's going on in the macroeconomic picture. So like right now, for instance, I think with rates going up, banks are a buy on the dip for sure, because in the next 2-3 years, obviously banks will be able to charge more for their loans. That's more revenue coming in. So they tend to be okay in a recession. Not saying that they're going to moon in a recession, but they tend to be okay. And leading up to a recession, as rates are going up, versus other stocks, consumer non-cyclicals, right? So that's why Walmart is mooning right now. That's why Costco is mooning right now. As things get more expensive, people start looking more towards budget areas. But then there are like lifetime companies, like Apple to me is a lifetime company. Amazon obviously is a lifetime company. They're not that hard to pick out,
Do you pick them because you think they're safe, or you think they're gonna like really just keep growing really big?
No, the growth stocks generally will grow. You expect them to grow at a rate slightly higher than inflation. But yeah, and I think that Apple hit the $3 trillion mark.
Right.
What more can you do in the short term?
Right.
Right. It's going to be crazy to say that this company is going to go from 3 to 4 trillion in the short term. So yeah, a lot of the growth has been baked in, and
so they're more safe.
Yeah. You're basically looking at a stock that can grow at an incremental rate, and if there's a reason that they moon, then yeah.
What do you think about these different funds like Cathie Wood's, where hers is just ultra growth oriented?
People that are familiar with my channel know that I've done a lot of videos on this, and it's not just a theme of the moment. I never understood how coming out of the pandemic, Zoom and Teladoc were the second and sixth largest stocks in her portfolio, right? And I'm like, we're coming out of the pandemic. I'm not questioning, your background or how much experience you have. Fine, you might be bona fide, but I just don't get that. And so when people look at certain things in the market and they say, oh, the hedge funds are doing this, I'm like, hedge funds are not always right. There are a lot of idiots that work in hedge funds. You saw hedge funds get blasted by a bunch of apes on internet forums last year, right? Twice.
Yeah. Then they changed the rules.
Yeah. Or they try to enforce the exchanges to change the rules. Yeah, exactly.
Right.
But hedge funds are not always just because you have the most money doesn't mean that you are the sharpest tool in the shed. Like, a bunch of people online figured out that, hey, we can take them down if we attack their shorts.
Decentralization.
Exactly.
Yeah.
Exactly. And I was all for that movement. Like, I might not believe in AMC or GameStop fundamentally, but I was all for the idea that it represented.
Yeah.
100%. So, yeah, the hedge funds are not the end-all, be-all. And certainly Cathie Woods can be criticized quite a bit for the holdings in the portfolio. And further that, I don't think a lot of those stocks are coming back. I think we saw a .com level boom and bust, in some of these stocks that will never see these valuations. Like, is Zoom going to be $700 again? I don't think so.
What is it today?
100?
Oh,
yeah.
yeah.
You know what I mean? Like, I don't think so. I honestly don't think.
How is Zoom going to even get bigger than it is today?
Exactly.
It's only going to have competitors come in.
And they say that on their earnings calls. So like some of these decisions, I'm like, are they just digging their heels in because they're afraid to
prove a point?
To
they
take
don't
the
want
fee?
to cut a loss.
Yeah. And it's always easy to say, oh, our horizon's long term.
Yeah.
That's always easy to say. That's what you say when you want to avoid questions in the short term.
Right.
Right? Oh, this is a 5-year horizon, 10-year horizon. You know what I mean? Like, who knows if Cathie Wood will be running a fund in 5 or 10 years. She might be chilling on a beach in Puerto Rico somewhere. You know what I mean? With your crypto friends.
All the crypto peeps, you know where to find them. They're in Puerto Rico. Have you ever been there? I mean, as the traveling trader, you guys
I've been to Puerto Rico. Yeah. I haven't been there a lot, no, but I've been to San Juan. Yeah.
You'd fit right in, dude.
Yeah.
Everyone's a trader over there.
Yeah, I thought about it, living in California. I'm like, where can I, emulate similar weather pattern?
Well, I'm curious, like, why you don't live there, because, I mean, if you lived in Puerto Rico for half the year, you don't have to pay taxes, and the other half, you could still do what you do.
Yeah. I still contemplating it. Still contemplating it. Yeah. It's hard for me to leave. I've been in California most of my life. It's hard for me to.
You got relationships
to leave there. Yeah, it's home. It's tough, and I do love the weather, and I do love SoCal. Unpopular opinion right now, but I do love SoCal.
You know what's funny is I say that on the channel. I went to school at Cal State Northridge.
Okay. In the Valley.
Yeah, and I'll say Cali or SoCal, and anybody from Cali is like, nobody says that.
Yeah.
Like, I don't know. We say it here in Vegas.
Yeah.
I don't know
yeah, no, Cali. We've always said Cali. I don't know. I guess it depends on
where you're from.
the circles that you run in. We always say Cali. SoCal, I only say that if I'm describing that area to people who are not from there.
Right.
But yeah, we don't say SoCal in Cali. But you definitely say Cali.
Okay.
Sure.
Well, I'm
There's
gonna keep saying it.
There's Tupac songs referencing Cali.
That's true. That's true. And that he is Cali.
Right.
So, well, Z, dude, it's been a lot of fun chatting with you, man. I actually learned a lot. And you did clarify a lot of things that now make more sense to me. I still don't see myself investing in stocks, at least for now.
That's fine.
But you know, maybe one day I'll get so rich and I'm like, I've got to diversify, and I'm gonna just buy the companies my 3-year-old tells me. I'm like, what brands do you know? That seems like the easiest way long term.
There you go. There you go. No need to read a balance sheet. But thank you for having me.
Yeah, man. So guys, make sure you go follow Z on YouTube and check out his courses and everything else if you want to get into trading. And thanks for watching. We'll catch you guys later. Peace.
Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.